You're listening to AI Prism from Seoul Economic Daily.
Foreign institutional flows into Korea are being pulled by three forces at once this week. US inflation looks like it's cooling, but the headline number is hiding something else. Korea's central bank could hike rates again Thursday, its second move in 2 months. And gold just had its best month in years as the dollar weakens. It's Monday, August 24th. Here's why global investors are paying attention to Korea today. US headline CPI growth slowed from a peak of 4.2% in May to 3.4% in July, and the Fed's preferred PCE gauge eased from 4.1% to 3.7% over the same period. But the current inflation wasn't triggered by ordinary demand shifts. It stems from tariffs and Middle East-driven oil supply shocks that monetary policy can't fix directly. Meanwhile, Korea's own rate decision this Thursday and a fresh rally in gold are adding new variables for anyone allocating capital to Korean assets. Here's what the numbers show. Brent crude traded above $100 a barrel through May, dropped after a June US-Iran ceasefire memorandum, then rebounded back above $90 a barrel once that agreement broke down last month. US 10-year and 30-year Treasury yields climbed to their highest levels since the global financial crisis, even as the Treasury intervened in the yen market for the first time in 28 years. 13 of 20 Korean economists and bond strategists surveyed expect the Bank of Korea to raise its base rate by 0.25 percentage points this Thursday, following last month's hike from 2.5% to 2.75%. Gold futures closed at $4,680.60 an ounce on August 21st, up 17.25% in a single month, after touching a yearly low of $3,992.10, as the dollar index fell to 98.80, its weakest since mid-May. SK Hynix's buybacks pushed other corporations' share of KOSPI trading volume from 0.34% to 3.77% in 2 days, filling the gap left by foreign investors who have net sold an average of 1.03 trillion won, or about $740 million a day this year. So what does this mean for global investors watching Korea? Earlier, we said US inflation looks like it's cooling, but the headline number is hiding something else. Here's what that actually means for you. With the slowdown driven by supply shocks rather than weaker demand, the case for imminent Fed easing remains thin, keeping dollar funding costs elevated for emerging market allocations, including Korea. A second straight Bank of Korea hike this Thursday would narrow, not widen, the policy gap with the Fed, which could ease some pressure on the won even as bond yields stay volatile. And with SK Hynix's buybacks cushioning the KOSPI against foreign selling, near-term index resilience may be more about corporate balance sheets than about renewed foreign appetite for Korean equities. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.